Hey, and welcome back to the channel so you can stay updated on the latest stock market news. The Dow Jones Industrial Average is experiencing an unprecedented winning streak, now extending to 12 days, so this is fantastic news for investors. In tech news, we saw Alphabet, which declared a code red for Google search in the face of emerging AI rivals like OpenAI, and Microsoft's AI-equipped Bing has demonstrated its capacity to adapt and thrive. Despite increased competition, Google's search advertising sales surpassed expectations, reaching an impressive $42.6 billion. The strong performance signals that the majority of users have not yet shifted to alternative search engines powered by AI technologies, cementing Google's position as the go-to search engine for most internet users. We also saw that Microsoft's earnings report surpassed expectations, solidifying its status as a tech powerhouse. The company reported its strongest quarterly profit ever, demonstrating the effectiveness of its AI-driven growth strategies. However, revenue growth slowed to under 10% for 3 consecutive quarters, a notable development since 2017. The slight slowdown is attributed to the considerable expenses incurred in building and expanding AI data centers. Nonetheless, the market remains optimistic, providing tech companies like Microsoft the flexibility to continue investing in AI technologies despite concerns about a potential AI bubble. Speaking about artificial intelligence, while many tech companies flourish with their AI-focused endeavors, Spotify's ambitious move into podcasting proved less fruitful. The streaming giant revealed widening losses, primarily attributed to its heavy investments in podcasting ventures. Despite adding a record number of new subscribers, Spotify's revenue projection fell short of analysts' predictions, disappointing investors. The market's response was a stock plunge, raising concerns about the sustainability of Spotify's podcasting strategy and its impact on the company's long-term financial health. The financial health of a company and the economy is key, so investors have their eyes on the Federal Reserve as the possibility of another rate hike looms. Investors closely await Jerome Powell's comments for any indication of the Fed's stance on potential future rate increases. As tech giants' strong earnings reports reflect growing confidence in AI-driven growth strategies, the market will closely monitor the Fed's actions and their potential impact on AI-focused stocks. In other macroeconomic news, tipping culture sparks debates on fair compensation. Tipping prompts are becoming increasingly prevalent across various industries, causing tip fatigue among consumers. A recent Bankrate survey indicates that 2/3 of Americans have a negative view of tipping, with 30% considering tipping culture to be out of control. The survey further reveals that 41% of respondents believe businesses should prioritize higher wages for employees rather than relying heavily on tips. As businesses adopt tipping prompts to cope with slim margins and avoid wage increases, discussions about fair compensation and wage growth for low-paid workers gain prominence. Now let's move on to the FSO Safer's looming oil spill crisis. The FSO Safer, which is a deteriorating cargo ship holding 1.1 million barrels of oil, poses a significant environmental threat in the Red Sea off the Yemeni coast. The ship has not received maintenance for 8 years due to the ongoing civil war in Yemen, creating a ticking time bomb that could result in a catastrophic oil spill. The potential consequences of the boat sinking would include disrupting a heavily trafficked shipping route, contaminating desalination plants used for drinking water, and devastating marine ecosystems. The United Nations has launched a complex and delicate rescue operation to transfer the oil safely to another tanker. The process involves a water balloon shield around the UN's vessel to prevent a boat-on-boat collision. If successful, the UN will be in possession of $75 million worth of oil, with plans to sell the crude and reinvest the proceeds into the Yemeni economy. Now let's focus more on single stocks, starting off with GM's surprise move. General Motors has stunned the market with its announcement to produce a next-generation Chevy Bolt EV, just 3 months after revealing its plan to halt the production of the popular electric vehicle. This unexpected move reflects the company's determination to keep pace in the rapidly evolving electric vehicle market and maintain its position as a key player in the green transportation revolution. Next up, we have UPS and Teamsters reaching a landmark deal, averting a possible strike. In what could have been one of the largest and costliest strikes in U.S. history, UPS and the Teamsters have successfully reached a tentative agreement on pay raises and workplace safety for 340,000 workers. This deal provides much-needed stability to UPS's operations and ensures better working conditions for its workforce. The resolution comes as a relief for both parties and the broader economy, averting potential disruptions in package deliveries. Up next, we have Spotify shares price declining. Despite adding a record 36 million new monthly listeners in the last quarter, Spotify's shares have taken a hit, dropping over 14% following a larger-than-expected loss and a disappointing forecast. To regain investor confidence and chase profitability, the music streaming giant is taking cost-cutting measures, signaling its determination to navigate the competitive music streaming landscape. However, we also have good news, such as many tech giants reaching new 52-week highs. Several tech giants, including Airbnb, Broadcom, Costco, Deere, DraftKings, General Electric, Lamb Weston, and Walmart, have achieved new 52-week highs, demonstrating their resilience and market dominance. Meanwhile, Google is receiving significant attention from major financial institutions, with JP Morgan, Citi, Goldman Sachs, Morgan Stanley, and Barclays all raising their price targets on Google's stock while maintaining favorable ratings. On top of that, Verizon and Google's YouTube unveiled a game-changing partnership. Verizon and Google's YouTube have unveiled an exciting new partnership that will grant eligible new and upgrading wireless and home internet customers free access to NFL Sunday Ticket for the season. The collaboration aims to enhance customer experiences and solidify both companies' positions in the competitive telecommunications and online content streaming industries. In legal news, the FTC's antitrust lawsuit against Amazon is heating up. The Federal Trade Commission's ongoing antitrust lawsuit against Amazon is gaining momentum, with the potential outcome being the breakup of parts of the e-commerce giant. The lawsuit is part of the broader scrutiny surrounding big tech companies' market dominance and aims to ensure fair competition and protect consumers' interests. Essentially, Amazon has too strong of a monopoly due to its various businesses, so the FTC wants to break Amazon up into smaller businesses so that other businesses can start to thrive. Lastly, we have Volkswagen's ambitious investment in XPeng. Volkswagen's announcement of a $700 million investment in XPeng demonstrates its commitment to exploring opportunities in the Chinese electric vehicle market. The investment also includes joint development of electric vehicles, and upon completion, Volkswagen will hold a 4.99% stake in the Chinese company and secure an observer board seat. This strategic move aligns with Volkswagen's broader expansion plans in the global electric vehicle industry. That is all the stock market news updates we have for today, so for more videos, remember to go and press the like button, subscribe, comment your thoughts down below on these news stories, and with that being said, happy investing!